Good day, ABM Business Finance learners. In this video, we will continue discussing the master budget that focuses on cash budget. But before that, let me present to you first the projected financial statements. What are these projected financial statements? Projected financial statements, also called pro forma financial statements, are representation of the financial picture of the firm through summarized current trends and expectations as of future date. It is prepared after all the other budgets, including cash budget, have been prepared. Projected financial statements are most effectively used to examine the effects of a particular decision. For example, the firm is considering to add new product line. Pro forma financial statements is used to see how the addition would impact the overall business performance. Projected financial statements can consist of number 1, projected balance sheet, number 2, projected income statement, and number 3, projected cash flow statement or cash budget. These statements are produced to present future financial information. Cash budget. What is cash budget? Cash budget provides information regarding the company's expected cash receipts and disbursements over a given period. It is useful for identifying future funding requirements or excess cash within a given period. This allows managers to find possible sources of financing if the cash budget shows cash shortage or identify appropriate tenures for money market placement for excess cash. Normally, a cash budget is prepared for a one-year period broken down into smaller intervals like months. This allows managers to see the seasonality of the business which affects the cash flows. The cash budget is part of planning. It helps managers anticipate future funding requirements in order to obtain proper financing even before the need arises. This will help them avoid usurious rates. On the other hand, if the company has excess cash, managers are able to identify the investment instruments that will maximize the return on the excess cash. What are the parts of cash budget? Cash budgets consist of the cash receipts and cash disbursement. Cash receipts include all the firm's inflows of cash in a given financial period. The most common components of cash receipts are cash sales, collections of accounts receivable, and other cash receipts. Cash disbursements include all outlays of cash by the firm during a given financial period. The most common cash disbursements are cash purchases, purchasing fixed assets, payments of accounts payable, interest payments, rent and lease payments, cash dividend payments, wages and salaries, principal payments on loans, and tax payments. How to prepare a cash budget? Let us take the sample problem. Make sure that you have a copy of the previous budgets that we have prepared. Let us read. For example, at Fab Company, borrows 1 million on the first day of the quarter and repays the loans on the last day of the quarter with 16% rate annually. Pays a cash dividend of 49,000 pesos in April. Purchases 143,700 pesos of equipment in May and 48,300 pesos in June. Both purchases paid in cash. Beginning cash balance of 500,000 pesos for the quarter. Like any other budget that we have prepared previously, we must write the heading first. Next, the quarter labels. Followed by the format of the cash budget. Now, let's fill in what's in the given. The first given is Fab Company borrows 1 million on the first day of the quarter and repays the loans on the last day of the quarter with 16% rate annually. That is the loan on the first day. And that's happened on April. Next, loan repayment on the last day, and that is 1 million. But then, it is said in the problem that we repay on loan with 16% rate annually. So the interest for 1 million is 40,000 pesos. So 40,000 is the 16% rate for the 1 million that we have borrowed. Next, pays a cash dividend of 49,000 pesos in April. Purchases 143,700 pesos of equipment in May and 48,300 pesos in June. Both purchases paid in cash. And next, beginning cash balance of 500,000 pesos for the quarter. Now, let us see the previous prepared budgets. Let us see first the cash collections budget. In cash collections budget, we will see the cash sales collection and credit sales collection. Plot it in our table. Next, for our cash disbursements, let us see the direct materials budget. And once again, plot all the information that we needed. Next, we have to see the direct labor budget. Followed by manufacturing overhead budget. And also don't forget the selling and administrative budget. And now, we have to solve first the balances for April. We add first the beginning cash balance, cash sales collection, and credit sales collection for the month of April. And we will get the total cash available, 677,500 pesos. Now, we are going to total the cash disbursement for the month of April. The total disbursement for the month of April is 361,000 pesos. Let us deduct this total disbursement to our total cash available, so we will get the cash balance or cash deficiency for the month of April. Now we add the financing, the borrowings for the month of April, that is amounting to 1 million pesos. The ending cash balance is 1,316,500. So whatever the ending cash balance for the previous month will be the beginning cash balance for the following month. And now, we have to solve for the remaining months. The total cash available, the total disbursement, which will be less to our total cash available, so we will know the cash balance or cash deficiency for the month. And add or less our financing. And now we are going to solve for the quarter balances. Let us begin with the beginning cash balance. The beginning cash balance is 500,000 pesos for the quarter. And we will add the beginning cash balance to our total cash collections. And we will get the total cash available amounting to 1,412,500. Now let us add all the total disbursement. Total disbursement amounting to 1,368,400 pesos. This amount will be deducted to our total cash available for the quarter. And that will be 44,100. 44,100 less the financing 40,000. The remaining cash balance for the quarter is 4,100. Let us always remember that the ending balances for the last month of the quarter will be the ending balance for the quarter. Once we're done, don't forget to double rule the final amount. Thank you!